And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. And as usual, I know I say this frequently, but certainly this week does stand up there as weeks of interest as it relates to the broader market. So let's not waste a minute. Going to jump right in, talk about what we are going to review today. First up is the markets. Where did we close the week? We were at a rather pivotal area. So certainly we want to know where we stand relative to the backdrop of the markets. And then from there, some of those headline news that drove price action this week. Also, what exactly is driving the markets and some of these individual areas that are beginning to bubble up to the surface as it relates to superior outperformance and strength. And then here we are, the headline news for this week. And one of the most impactful that was rather maybe buried if you do not follow the global news was the fact that China posted their strongest manufacturing activity data in a decade. Super strong numbers. And the numbers outside of manufacturing were also up, not as strong as that manufacturing side. I'm going to share with you the impact there relative to the markets. It was one of the stronger moving items that took place this week. Also, we did see earlier in the week, durable goods orders did show the economy was still growing. That really helped the weakness that we saw going into this week. Consumer confidence did slip on inflation fears. That's still elevated out there. And on Thursday, we did have a Fed president speak at a forum. His comments did spur a late week rally because there was talk of a halting in his mind of the increased rate hike cycle before year end. So that got the markets really turning around. We also will next week see weekly jobless claims. Actually, I apologize. This is for this week. Weekly jobless claims did fall. And then we had the services sector, that purchasing manager index number. The service sector does account for almost 3/4 of the economy. So it's a big part, and it did show continued growth. That is not a great thing. Both of these data points normally would be viewed negatively. However, the markets were in rally mode as the week ended. Next week, we will get very important metrics by way of the February employment report. That's going to come out on Friday. And then we get factory orders earlier in the week, but it's really going to be that employment data that's going to be very closely watched. So from here, let's go ahead, take a look at the broader markets. And here we are with the daily chart of the S&P 500. Couple of things that I want to point out that are rather interesting here. And one is the fact that we do now have positive momentum by way of that RSI data. We did close up there just above that 50 level in positive territory. And this is very important of my momentum indicators. I do place quite a bit of weight on that RSI, and the fact that it did dip into positive territory is very constructive. Down here with the stochastics, a faster moving momentum indicator, it is still in negative territory, but heading north. Also, we want to take a look at where the markets closed relative to these moving averages. So I'll use this less congested area here to point out that the green line is 10-day, 21, 50, and 200-day simple moving average. The relevance here is that we were paying very close attention to that 4,100 level. That was viewed as a key area of both resistance and support. Beyond that, these moving averages become very important as far as, again, support or resistance. So going into the open on Thursday, we were very close, very precarious position, poised to break below this longer term 200-day simple moving average. And then, of course, that late day Fed sparked rally did push the S&P 500 up further away from that. And then we had a continuation rally today, the S&P 500, so that it is now back above this 10-day simple moving average with a positive RSI, and that is constructive. That does qualify as a shift from this near-term downtrend into an uptrend. So good news there. From here, let's go ahead and take a quick look at the NASDAQ, because you want to be aware of what is taking shape in this high growth area. It was a big outperformer this week as it rallied 2.5% relative to the S&P's 1.8%. And I apologize, not updated here, but I will share with you what we are seeing. That RSI did turn positive on the NASDAQ, and the stochastic's heading up. Of note here is that move and close above that 10-day simple moving average. So we have the NASDAQ in an uptrend as well. So exciting. Of course, we've seen this type of action in the past, so it's something certainly I will be super closely watching. I have my twice weekly MEM Edge reports, but on weeks where shifts take shape, I do put reports out as needed every day, really. So let's go ahead from here and take a look at the underlying sector ETFs in the S&P 500. And this is a 2-month daily price chart view of those sectors. And what I've done is added a relative strength indicator, sorted these sectors in descending order. And the purpose here is to really help you identify sector rotation as you see sectors up here in this left stronger quartile potentially move lower. And then likewise on the lookout for movement in the weaker areas up to the stronger areas. So a couple of developments this week. First up, technology remains in the forefront. And this is something even during the pullback phase in the broader markets, tech still stood strong up here. So that is good news. But let's take a look at some of these areas that are a bit newer. First up, we have XLB. This is the basic materials sector, up 4.1%. So that is certainly a newer area as far as relative clear outperformance. And then also up here at the forefront, which had been, but it is more in the stronger area. This is XLI, the industrial ETF, up 3.3%. So I did talk to you as it relates to news. China's manufacturing data, that is one of the primary reasons that we are seeing performance in these areas. And as we move forward, I will share with you precisely where, but it does have a lot to do with potential growth in China of these U.S. companies. Also, industrials, a lot of underlying strength due to strong earnings reports. And this is something I've been talking about a lot in my MEM Edge report, the concept that, from my estimation, we are in the throes of a secondary or a new age industrial revolution due to the fact of technology really helping with productivity and bottom line increases in growth. So let's go ahead and move on from here. I talked about tech remaining up here at the forefront. You can see it did pull back with the markets, but now back in positive territory. That's certainly good news. Technology accounts for a good percent of the broader markets, over 20, I believe 28% of the S&P 500 is comprised of these tech names. So let's go ahead and move down a little bit from here, because there are other areas that I want to share with you as it relates to these weaker areas and something that may be taking shape. We'll get a little bit more into this, but healthcare really has been underperforming for over 2 months now. And we did see a bit of vibrancy, and we're not certainly out of the woods yet, but it is a nice 2-day rally. I'll share with you one of the areas of strength. Actually, there are two in the healthcare space that you're going to want to keep an eye on. And then also from here, we can take a look at other areas that were on the move. XLE up 3% last week. And then we'll take a look at some of the dynamics there as well, but certainly earnings driven in select areas of energy. So let's go ahead from here and take a look at some of the underlying areas within these sectors that we just reviewed. And I use highly watched ETFs. Certainly I watch closely because they're very representative of the markets and really allow you to kind of fine tune beyond the sectors where that relative outperformance is, all with an eye toward where you may want to more closely examine putting your money to work. So here we are with the various ETFs. I am going to go ahead and refresh this so that I have the latest pricing. And up here at the forefront, this is the yield on the 10-year Treasury. It did get up to that 4% level. That's a widely watched level. And then the Fed president comments on Thursday did push this back so that we closed the week at 3.9%. So an interesting dynamic because rising rates are not good for growth stocks. However, we did see the markets overcome this elevated interest rate environment, as well as some of those headline news that I shared with you. Also up here in the forefront, I did want to share this with you because it did post an outside engulfing pattern, and that is generally bullish. This is the USO, the oil fund, and not sure if you would want to play that specifically with this ETF because it does have resistance here at this blue line, but something of note as it relates to the price of oil, which reversed on a pullback. So as we move forward, one area that is definitely moving up here that I don't normally include, but I did want to share with you, that is DBC. It's the Invesco Commodity Index. Now, we are coming off super low levels. It's not anything overly exciting, but we did see a move in those commodities. I talked about XLB, and it was in addition to, as we move on, I'll share with you some of the more specific areas in the commodity space that responded to that strong China data. So we talked about tech really holding in well, and two reasons. One here is the semiconductor index. We did have a couple more companies come out, report relatively strong numbers, and you can see that this sector does have, this ETF has positive RSI. We are poised for that MACD black line up through the red, which would indicate that this downward and then consolidation phase has turned into an uptrend. It's an area certainly that I've been speaking highly of, and we do have names from that area on my MEM Edge report. So from here, other areas just to take a quick look at, I mentioned to you that healthcare was trying to come off the flattened ground, but here we are with IBB. This is the NASDAQ Biotech ETF reversing here. I'm going to pull up a weekly just to highlight the fact that it really did fall out of bed. And biotech names are all about stocks and companies that don't yet have earnings. So entering into these stocks is a very risky activity. So when we see a rally in these stocks, it indicates somewhat improved sentiment among investors. So that is certainly worth pointing out. And then I'm trying to see if there's anything else of note here, because we did talk about software stocks. They did reverse their downtrend as well. We are seeing strength there, and that's a big area. 310 names are in the software sub-industry grouping in the markets. So another area I would say you definitely want to explore. So from here, I did want to share with you some of just a couple of the names in the metals basic materials that would drive that DBC. This is US Steel, STLD. Had a nice downtrend reversal, super strong week. So we are seeing metals such as steels stocks. And then also we are seeing movement in fertilizer stocks. And this would be a prime example, Mosaic, MOS. So just to give you a sense of that. Now, from here, I am going to pivot and take a look, share with you some other actions and some areas that I would recommend that you certainly be aware of as it relates to the markets and ways that you can possibly embrace or get involved. For now, it would still warrant some caution if you are looking to put money to work. but certainly the dynamics as of the close today are constructive. So we're looking here at StockCharts.com, that first interface page. And this is something that, of course, they do every day with the various broader market indices, the Dow, S&P, NASDAQ, and so forth, market movers. Quite simply, you can do the most active. I like to focus on the names that are up the most. And it is twofold. I am looking for group movement where you see several names within a given industry or sector to then point you in that area. But also, let's take a look how this can really be helpful, particularly if you are active first thing in the morning. And all these names, I will say, from having looked at this view every day for many years, the list does remain very static or the same. So really, you don't need to sit in front of your screen, but let's take a look at some of the dynamics and how this view can be very helpful and quickly help you assess on any given day where the strength is. So on the S&P 500 after the close today, and this list, as I stated, was similar at the open as well, I wanted to point out a couple of things. First up is taking a look at ILMN, COO, and then ALGN up here at the forefront. Each of these are in the medical products space. So that is certainly something of note. And then from here, and I will share with you the chart for that group, but from here, let's take a look at how, if you were a more active trader, staying on top of a list such as this could be really beneficial. So here we are with Illumina, ILMN, and we can see that the price action over the last 2 days, above average volume, and now we have momentum that has shifted into positive territory, both the MACD and the RSI. So from here, I'm just going to take us down to an intraday chart and share with you what you can potentially ways that you can capitalize, again, if you are more active. And then, of course, we'll drill out to a longer term view as well. So here's this rally on the last 2 days. Oftentimes with this list, you will see that a particular stock, I'll share with you as we move forward, a name will hit the list more than once on a given week as it enters into a strong uptrend. So on this 15-minute view of ILMN, here we are on Thursday's open, and it was rather a weak period for the broader markets, but this stock was bucking that downtrend. Just going to take a minute here and mark up what to be on the lookout for if you were considering taking advantage of the fact that this stock was on the move. First up, you can see the MACD on this 15-minute enter into positive territory. We also have the stock's price breaking above the 5 and 13 simple moving average. And then as we look up here at the RSI, you can see that it was a simultaneous move into positive territory. So when you are examining stocks in this shorter term time frame, as long as the stock remains above these moving averages and your momentum remains in positive territory, you can stay with the stock. One other area, or certainly item that to take note of, is if you have a stock rally on the open, if that third bar post and closes above the high of that first bar, statistically, it is in a better position to continue to trade higher. So from here, let's go ahead and take another look at this view of the percent and the names that were up the most today on the S&P 500. And I will point out a couple of other items for you as well. This is FSLR, First Solar. And this is a stock today was the second day for the week that it hit the highest percent mover on a given day. So here we are. We can go back. We are looking at the daily chart. You can see this gap up. And I'll share with you what took place on that gap up because it is the most bullish base breakout formation. So here we are. The stock did report earnings after the close on Tuesday, and it had this gap up into what's called a base breakout. It hit a new high here. Take a look at this volume, super high volume, indicating accumulation. And then from there, it did enter into an uptrend. So I'm just going to take a minute, take us down to that intraday quickly so I can share with you some of the dynamics. This is a stock that I have owned for quite some time, so quite familiar with its trading action. But here we are after the earnings release, that gap up, third bar presenting itself above the high on that first bar, and then a continuation rally. Now, what I wanted to point out to you is the stock FSLR did break below that 5 and 13 moving average on this 15-minute, but take a look. Your momentum remained in positive territory, and then we had this nice MACD crossover indicating that this period of consolidation had shifted into an uptrend. So I did want to take a minute and share that with you. If the markets continue to progress, this would be one area that I would pay close attention to. Not only, again, will it get you in front of group movement, but potential candidates, not only short term. I did share with you ILMN on the daily, just entering into a new uptrend. From here, longer term investors may want to look at the weekly chart. Now you'll see it has quite a bit in the way of upside potential overhead supply. But on that longer term, if we can get these momentums into positive territory, we could be on the lookout for further upside there. So some of the other metrics and areas, what I wanted to share with you is stocks that pulled back with the broader markets and are potential candidates, given that they rallied over the last 2 days on Thursday, late Thursday into Friday. So let me just go ahead here. So what I do want to share with you are a couple of names as for instance. I did notice that there was vibrancy in payment processing stocks. So here we are with American Express. And for me, I have a very vibrant watch list, and it's comprised of stocks that have experienced nice price movement, but most importantly, strong earnings. They're going to make it onto my watch list so that when they pull back and potentially reverse, I'm aware of that. So with American Express, we did have a gap up at the end of January, strong earnings, pulled back, momentum remained positive, and now AXP is back above those shorter term moving averages. Now I am going to compare that. So in other words, AXP is now in a new confirmed uptrend. Just want to compare that to MasterCard. Now, the stock, this is a very unusual print, but they did not have earnings quite as strong, but they are attempting to reverse that downtrend. Not quite there. Momentum is not there. And then it is still below key moving averages. But really, most importantly, you do want to be in those winners, the AXPs of the world, if you're comparing. But here we are with Visa as well. Very similar, not quite ready for prime time yet. And then one other area within that payment processing, we can take a look at Block. This is SQ, as is the ticker symbol. And you can see that it pulled back here, found support at that 50-day, but has reversed that. Very big volume here. I believe they did have earnings at that point, but it found support at that 50-day, so it looks kind of interesting. Again, high volume on the rally is what you want to see. And we'll go ahead and compare that to a competitor, PayPal. And you can see the real difference here. It's just not ready. That momentum is not in positive territory, and it has a lot in the way of upside potential resistance there. So I did want to share that concept with you as it relates to pullbacks and turnarounds, what to be on the lookout for. And I'll share with you some pullback buy ideas, and then some that are just shaping up, and all of these are going to be stocks that came in with strong numbers. Here's Airbnb, had a gap up there in the middle of February after reporting very strong earnings, pulled back sharply. Momentum stayed positive, so be on the lookout for that MACD crossover and move above that 10-day moving average. Another stock that reported strong earnings. Here we are, Uber, big earnings pullback in the throes of reversing that downtrend with positive momentum. So I think I have time for maybe just a few more here, but these are names that are just not ready for prime time. This is Floor & Decor, came out with strong numbers, pulled back, but is still stuck below these moving average, not quite as vibrant. I'll share with you a name that I put out on Monday with your Daily 5, which is posted on StockCharts.com. And this is EQT, not normally my style, but it just so happened that natural gas, had a very big week. They're a major transporter of natural gas. But here we are with that pullback and then a nice reversal. And then one other tech name that we can take a look at that came out with very strong numbers. This is AYX, classic pullback to that 21, and then a nice downtrend reversal shaping up there. One last name that we can look at that is, again, not quite ready for prime time, APPN. Let's see if we can sneak in a couple more here, SHOP. And you can see that it had been elevated. Their numbers were not that great. This would not be on the top of my candidate list, but just taking a look at that momentum potentially shifting. And I did talk about software stocks in general coming back into play. So I will leave it at that for this week. And again, if you haven't already, use that link below. You can trial my twice weekly MEM Edge report for a very nominal fee. And I will share lots more that is taking place in the markets right now. Have a great weekend. See you here next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.